The real estate market should have crashed by now, if it was going to. The Bank of Canada interest rate has been at a 20-year high of 5% for almost a year now, and last year, real estate sales were the fewest that we've seen in a decade. But prices still haven't come down significantly. Year over year, in my local market of Kelowna, prices have hardly changed, and there's no signs that the market is going to crash. But why not? In this month's market update, we'll take a look at what my local market's doing right now and try to answer that question. I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you'd like to stay up to date with my local market, hit the like and subscribe buttons so that you don't miss out on future market updates. And if you'd like to book a call with me to discuss real estate in the Okanagan, hit the first link in the description where you can book a time that works best for you. Now let's take a look at what happened in my market of Kelowna in the central Okanagan last month. The first statistic to look at is the monthly sales numbers. As you can see, 2024 actually had a slower start than we had in 2023, but in April, we've caught up to the numbers from the previous year on a month-to-month basis. If we look at the graph, you can see that sales in 2023 got off to a strong start, and then the Bank of Canada had those rate increases, which really cooled off the market. I said earlier that 2023 was the fewest sales we'd seen in Canadian real estate in a decade, and that was true for the year overall, but it did have a strong start to the year until the Bank of Canada stepped in and increased those rates, and real estate activity really cooled off. As you can see, this year we had that slower start, but in April we've caught up to the numbers that we did last year. The next Bank of Canada rate announcement is in June, and I'm just wondering what's going to happen to that sales volume if we do see a decrease in rates. There's a lot of buyers sitting on the sidelines right now waiting for interest rates to come down before they make a move. So if you're one of those people that's looking right now, there might be a window of opportunity for you where you're not competing for those properties against as many buyers as you could be when we do see a rate decrease. I'm also curious to see what happens with sales volume when that rate comes down. Active listings have grown this year to just under 4,000, whereas at this same time last year we had about 2,500 listings. So that begs the question, inventory is growing and sales are down. You would think that there would be downward pressure on prices, but we still haven't seen that, and I'll get to the prices from last month in a minute. When we take a look at interest rates, you can see that that Bank of Canada rate has been consistent over the last 6 months, but the CMHC insured 5-year fixed mortgage rate has actually come down in the last few months. That rate coming down hasn't really hit the news a lot, but it has come down about 3/4 of a point, and I think there are some buyers that have recognized that interest rates are less than they were in, say, last October for a fixed rate, and they've slowly came back into the market. If we look at the benchmark price of a single-family detached home, in April it came in at $1,009,000, which is a 1.9% increase from the previous month where we were at $986,000. You would think with increased inventory and the rates being higher and sales being down that there would actually be downward pressure on prices, but for some reason we can see that prices actually went up on a month-to-month basis. But let's take a look at what happened year over year. Year over year, that benchmark price in April of $1,009,000 is actually down from last April 3.6%, which was $1,046,000. If we take a look at the benchmark price graph, you can see that there was that bubble, for a lack of a better term, last spring, and then you can see where the Bank of Canada changed the interest rates around July and the market declined. So year over year, the price in April 2024 was down from last year because the market was taking off. But as you can see, it's actually higher now than it was last fall. And if we take a broader look and go all the way out by 3 years, you can see that there were 2 bubbles in the market in the spring of 2022 and in the spring of 2023. But over the last 6 months, that price has actually been relatively flat. If we move into the townhome market, you can see that the benchmark price in April was $734,000, which is up 2.1% from the previous month of March, which was $719,000. Year over year, that price is relatively unchanged, coming in at $400 difference from what we were last spring. If we look at that benchmark price graph over the last year, you can see there's been quite a bit of volatility. It came down when the Bank of Canada rates were increased around June and July of last year, and has bounced around. The trend generally has been on the downward, but we've bounced back in the last month. And if we take that out over the last 3 years, you can see again the two bubbles in the spring of 2022, the spring of 2023. But overall, the price is still higher than it was 3 years ago. Moving into the condo market, you can see the benchmark price in April was $508,000, which is up 2.5% from March, which was $496,000. This one surprised me a little bit because there's new short-term rental regulations which came into effect May 1st, so you would think that the inventory in condos would have increased over the last few months and the price would have come down. But as we can see from the benchmark, that simply hasn't happened yet. Maybe it will in the future as more inventory comes on in the condos, but we haven't seen that effect yet. If we look at the year-over-year comparison though, the price in April was down 2% from the same time last year. Looking at the benchmark price graph, you can see it's the same as the townhome and the single-family homes. We had a bubble last spring, prices came down, and over the last 3 to 4 months, prices have been steadily increasing. Taking that broader view over the last 3 years, again, you see the same activity as we saw in the other parts of the market. Generally, there are the two bubbles. We've flattened out over the last 4 to 6 months, but we're still higher than we were 3 years ago. Taking a look at the average days to sell, it has taken 46 days on average for a single-family home to sell, 49 days for a townhome, and 63 days for a condo. Single-family homes, on average, are selling for 97% of the list price. The average days on market is a good thing to look at, and over the last 3 months it's actually been declining. The average days it's taking for something to sell has been less and less, so that tells me that some of the market is actually picking up and things are selling a little bit quicker. It's also an important statistic to look at if you're a buyer. If you're looking at a single family home and it's been on the market for 7 days, but you know that the average days to sell is over 40, your chances of getting a lowball offer accepted on that are probably pretty low, because as the seller's agent, they'd be telling their sellers, you know what, we've just been on the market for 7 days, let's hold off to see if better offers come. On the flip side to that, if you're a buyer and you're looking at a home that's been on the market for 100 days, which is more than the average days on market, you may be in a better position to get that lowball offer accepted or looked at, or at least be in a better position to negotiate. If we take a look at the months of inventory, you can see that in single-family detached homes, we have about 7 months, which is a balancing market. A couple months ago, this number was at 11 months or 10 months, which is firmly into a buyer's market territory. But over the last 2 months, the available inventory versus sales has decreased, and we're getting closer and closer to a balanced market in the single-family detached homes. Remember, in a balanced market, there's not a lot of pressure for prices to go up or go down. If we look at townhomes, they've decreased in months of available inventory to 5 months, which is a balanced market. And in the condo market, we've actually fallen from 10 months of available inventory to 6 months of available inventory, which again is a balancing market. If we plot the changes of months of inventory out on a graph, you can see that over the last 3 to 4 months in all asset classes, the available months of inventory has been declining. This, I think, is one of the reasons that we're not seeing a lot of pressure on prices to come down. Yes, activity's slower than it was a year or two ago, but in those instances, we were firmly in a seller's market where there was upward pressure on prices. So we treaded slightly into that buyer's market territory for a couple of months between November, December, and January, which prices came down a little bit if you remember from the benchmark price graphs, but over the last 3 or 4 months, available inventory has steadily gone closer and closer and closer to a balanced market. And I think that's one of the reasons why we haven't seen prices crash. Had we already been in a balanced market and everything slowed down and prices went higher, we would have been pushed firmly into that buyer's market and there would have been a lot of pressure on prices to come down. But because we moved from somewhat of a seller's market only into a balanced market, there hasn't been significant pressure on prices to crash, and that's why we're not seeing prices come down significantly. The last thing that we should look at is where the volume of transactions is happening. And as you can see by the residential sales by price, the majority of the market sales are happening between $700 and $1.2 million. A large chunk of the volume of sales that are happening is in that window. So that's kind of what's happening in my local market right now. all of the asset classes are bordering on a balanced market, which doesn't put a lot of downward pressure on prices. It doesn't put pressure on prices to go up either. Prices are slightly down from the peak that we saw last year and certainly down from the peak of 2 years ago, but realistically, prices have been relatively flat over the last 6 months. I don't see a lot of downward pressure coming into the market to bring those prices down anymore. And if interest rates do start to come down, the Bank of Canada adjusts its overnight rate, more and more buyers are going to come into the market, which could eat up a lot of that available inventory pretty quickly. So let me know what you think in the comments below. Are we just in a holding pattern right now? And when the Bank of Canada rate comes down, there will be more buyers in the market and prices will eventually go up? Or are there other economic factors that I'm not thinking about that's going to bring prices down even more? And if you'd like to book a call with me to discuss your next purchase, hit the first link in the description to book a time that works best for you. Thanks for watching, and we'll see you next time.